we turn to you for your expertise because you have announcements to make. You are still building in a space, but ultimately, you are currently a man who is trying to digitize the entire, and ultimately trying to digitize world's assets for traditional finance, for asset managers. How hard is that when we see Silvergate having to unwind?
Well, clearly it's going to be a lot harder when all the intermediaries and seemingly all the intermediaries and the on-ramps for institutions and individuals into the crypto ecosystem are one by one getting removed, either through regulation, through bad actors, through risk management, bad fundamentals like in the Silvergate case. So it's not easy, it makes it harder, but you continue to build and continue to get partnerships.
John, you're operating in an ecosystem, in an industry that still wants to build, have access to capital, needs banking services. Just very quickly, give us some insight into the conversations you're having with industry peers about Silvergate, about what this industry is going through right now.
So when things get better, the issue is if there are no on-ramps, no intermediaries to help new institutions come into the space, that'll delay the growth of the space. The other problem is even healthy balance sheets in the space, they need little things, banking services. Like crypto is a fintech business and legitimate businesses need banking services to pay people, to do things that every other company does. If we remove the banks that help these companies do that, you're removing companies' desire to be onshore. And unfortunately, US companies will move offshore for banking services and other things that they need to just operate.
Caroline, I just want to go back to the point you and I are making at the top of the show, right, which is if you put Silvergate side by side with SVB, what do they have in common? It's a discussion around what the impact of higher rates has been on froth. Where is the froth? It's in crypto and it's in technology more broadly. We're just seeing a delayed reaction, it seems.
And SVB
well,
having to come.
If I may, I've seen this a couple of times in my career, because my first part of my career was in the financial markets. Every time the Fed raises rates, things break. And the first things that break are usually the bad actors and the frauds. And then at the tail end of that, bad risk management, bad fundamentally driven companies break. So if there's a silver lining here is now we're at layer 2.
Yeah.
And then when things stabilize, hopefully we go back to a stable environment.
John, are regulators turning to you for advice?
They should. I was down in DC and talking to senators and talking to other agencies. Our general counsel's constantly down there talking. I think we need to open up a healthy dialogue. It can't be just one way. And if that happens, you'll bring a lot of the capital markets back and a lot of the innovation back. Otherwise, like I've been saying, things are going to continue to move offshore because the certainty in rules and regulations is happening in Europe, is happening actually even in Asia.
What's so fascinating is, of course, at the same time as we worry about Silvergate's implications, we think about what's happening with Silicon Valley Bank at the moment, its exposure to technology, to startups. John, just want to bring our audience some breaking news that, interestingly, the Founders Fund, which a key VC player is advising that its own companies should withdraw funds from Silicon Valley Bank. Now, we know the CEO of Silicon Valley Bank has been out there trying to reassure clients as to what the stock drop means, what the conservation of its capital at the moment is trying to signify. But ultimately, we are going to see some concerns being built if Founders Fund are indeed advising their own portfolio companies to withdraw funds from SVB. Can I ask you, as a founder, John, do you have money in traditional finance? Do you have money with Silicon Valley Bank?
Well, Silicon Valley Bank is one of the banks that we use, as well as some of the other ones that were mentioned. So I think the right thing, the prudent thing we've learned is counterparty risk once these things start. This is a classic bank run. And when the bank run starts, you don't want to be the last guy there and wondering what happened. Unfortunately, this is the way banks work. They rely on trust. When they lose that trust, bad things really will happen.
John, so I know we have so much to discuss about Ava and what's happening with Avalanche, but we have to stick with this story because it's happening before our eyes. What do you do in this situation? Do you follow the advice of names in the Valley like Founders Fund and pull the money? Do you stick with it? I mean, I have to just point out, there were a number of names that Bloomberg cited in its reporting that said what we're seeing in Silicon Valley Bank is not the same as Silvergate, and actually long term they have a completely solid future. What would you do in this circumstance?
Well, hopefully there's enough. What I would do is you have to diversify out. and maybe not pull everything, but pull some.
Have you,
We
John?
experienced this back in the great financial crisis where you had to diversify your prime brokers. Luckily, we have already diversified, so we're less exposed than we were literally just a few weeks or months ago.
Okay, and I think ultimately you're going to continue to dig, to ask questions. Has it been easy to gain that sort of information from Silicon Valley Bank at the moment, or are you relying on analyst reports that we get, and indeed some of the reporting coming from our own journalists?
You're relying on your own interactions. The operator always has a better view. The cadence of responses and how things are working, the size of transactions, all of those little subtle hints is what we're relying on as an operator. By the time you read it in the news or something, unfortunately, it's probably a little bit late.
I just want to ask a little bit. Of course, you are there trying to ensure that your banking is secure, that where your money is put, that your business is on solid footing, and I'm sure you have done, and as you said, you've already diversified. You're also diversifying your business, and just very briefly, John, we brought you on the show because you've done this new deal. You're bringing Web3 to gaming in particular. How hard is that to sign these new sort of documents, get on board the likes of TSM and Blitz app when people are questioning the overall Web3 trajectory?
Great question. And that's the fun part, by the way. No doubt it's harder, and especially with US companies. But the cadence in foreign companies is actually happening. In this TSM case, just so people know, this is one of the largest gaming franchises. TSM is the equivalent of an esports team. It's like the Yankees for esports. And they're going to provide their gamers with some of the requests the gamers want, which is to get more liquidity for their in-game items through an Avalanche-based wallet. Right now, the way the world works is gamers have closed-loop systems where they buy in-game assets on one place, but they can't sell and move to another very quickly, or they have to pay large fees to convert back to US dollars. So they're going to create a wallet on Avalanche where all these different games will have interoperability and make their lives better.